Hello and welcome back to Dukascopy TV. Up next to discuss European bonds and equities, I'm joined by Mirko Visco, Managing Director of Generation Alpha. Mirko, thank you very much for coming in today.
Good morning, Natalie. Thank you so much for having me.
Not at all. Now let's begin with peripheral European assets, and these have really made a massive recovery of late. Bond yields have fallen dramatically, and we've seen a huge jump in equities. If we take, for example, Portugal, Italian, Spanish equities, they've increased 70% since July 2012. Now, do you think that this rise in investor sentiment is justifiable, particularly if we take, for example, Spain, which currently has a budget deficit of over 6%?
Well, this is true, Natalie. Peripheral markets have had budget deficits, but they are not the only one, in fact, that had budget deficits. And I think the market has accepted that. The market sentiment shifted from a very negative level to a very positive level today, and I think it can maintain this level for quite longer, in particular because there is still potentially valuation gaps between US markets, developed markets, and the peripheral markets. Whether these values today are fair value, probably. Whether the bond markets can continue, maybe a little bit still for Italy, Spain, and Portugal, I would say.
Now, the Athens stock market is presently up 130%. That's a phenomenal amount, really. What has caused that rise, and what extra factors do you think we should particularly still be cautious of with regards to Greece?
Well, percentages, they don't mean much. In fact, the Athens Stock Exchange still trades 55% below the high levels. They recover 130%, but it's only a third maybe of the drawdown that we've seen in the stock market. So a lot of deterioration of assets have happened. This recovery is a normal recovery that I think is based on the economical data. There have been improvement, a lot of improvement in the asset management liability from the Greek government. So I wouldn't look much at the percentage numbers. I would rather look at the absolute numbers. Today, most of the stock exchange is linked to the banking sector, and the banking sector has been trying a lot to sell some of the toxic assets and to refocus on the core business. So probably today the stock exchange is at a fair value, but I think if the asset management liability continues to improve, it can still perform. Now, 130% is a one-year track record. Over the 2014 period, the stock exchange is only up 7%, which is in line with Spain, which is in line with Italy, in fact.
Now, I also wanted to ask you about Irish bond yields. These recently held near record lows, only a whisker above US equivalent borrowing costs. Do you think the island's going to continue to outperform sort of the other peripheral areas?
I don't think so. In fact, since beginning of the year, over maybe even a 3-month period, the Irish bonds have underperformed the Spanish, the Portuguese, and the Italian ones. They've tightened, obviously, but they've not tightened as much as the others. So I think there is an underperformance relative to the other PX market. Now, why that? Simply because the Irish government was the first one to take strong actions. The implementation of the NAMA helped a lot of the banks to sell their real estate, and in fact a lot of the real estate has been purchased by the international investors. And today the economical data in Ireland is in line, in fact, with the rest of the developed European market. So I don't think that the Irish market does represent today the proper risk reward that investors would like to have. I think there are better opportunities in the PIGS market if we want to play the peripheral market. And I would even say that the increase of the Irish real estate market is giving some breath to the economy, but maybe there is an issue about potential correction of the Irish real estate market. And if that happens, that could create some issues for the stock market, but as well for the bonds.
Mirko, thank you so much for coming in and sharing your expertise with us. Really appreciate it.
Thank you so much, Natalie. Thank you.
Mirko Visco there, Managing Director of Generation Alpha. If you want more interviews with market insiders, then stay tuned to Dukascopy TV.